Hello folks, LA Little here, and this is your daily NeoTA wrap. We take a look at these markets, and we do it from a neoclassical perspective. Each time we ask ourselves, what happened today, and what does it tell us about the coming ones? I do this show 4 times a week, every Monday through Thursday. It's broadcast at or before 10 o'clock Eastern Time. Archived on YouTube under the channel LA Little. Subscribe to it there. And you'll get the updates on a daily basis. Anytime I push content to YouTube, you get notification, and that's a sweet deal, right? You don't have to figure it out when it shows up. As far as these markets showing up, it was today. Big spike higher. We talked about this last night. We talked about that it looked as if, from the auxiliary markets, bonds, junk bonds, the currencies, and the oil market, right? Those 4 last night led me to believe that probably today, and given the fact that, we'd been down 6 or 7 days, that probably today was the day we'd probably see some sort of turn. You also had that, coming into a Fed meeting as well. And so, the market was set up to try to turn, and that is exactly what happened here. Is we had a nice big spike to the north. We had, and especially in the Russell. I mean, the Russell caught fire, and a lot of that in the Russell was a direct result of the oil market getting a nice bounce today. Oil ended up, it got as high as 22.43 and ended up just 0.2% basically, but it was down another 2%, 2.5%. So you had about a 4.5% rally in the oil market, and you had a huge rally in the oil and energy sector. And that is what drove the Russell to outperform 3% today there, 2% on the S&Ps, almost 2% on both the composite, the NDX, and the Dow was the laggard, coming up about a 1.7. Gold down slightly. Bonds sold down today. That was something we had looked at yesterday as well. And as I said, oil was up. And then the big thing was the currencies. You had a huge turn with the dollar rocketing back up, FXE, FXY spiraling back down, pushing those markets higher, right? Because their currencies are cheaper, and that led to big rallies in the ETFs of Europe and of Asia, Japan in particular. So let's do something a little bit different tonight than we normally do, and that is that normally I come on here and I've kind of prepared, and I had a question emailed to me asking me, how long does it take you to prepare, and how do you prepare? And so rather than me spending the 20 or 30 minutes to prepare, which is about what it usually takes me, and then I record the show, I just thought I'd go through it, and because that's the only question I had tonight, and because we can just do it live, right, as I do it. So first thing I do is I flip through the main indexes, the 4 major indexes. I look to see, and a lot of this I know because I'm around the charts all day long, so I kind of know how these things are set up. The low here was 1706.750 yesterday. Today you get to 1706.9, so you didn't get under it. So you got an inside bar. You got about the same volume. It tells me nothing. So even on one of the largest moves up, it really doesn't tell me anything. So if I go to the S&P and I look at it and I ask, okay, now what does it tell me? Top on this guy, 2016.89. We got to 2016.75. So again, inside bar, huge white candle, nice bar, same amount of volume. Again, doesn't tell me anything. NASDAQ, composite. When I look at this, it does tell me something. You got more volume. The top here was 46.45.19. You got over that, 46.51. You closed under it. That would be a failure on price, but what? We got more volume. Nice. That means we're going to go right back and test it again. So that tells me something, and that tells me it's going to try to test higher tomorrow. If I go to the NDX, this one, of course, has been the one that's lagging. The good thing about this one, 41.90. Let me see the bottom, 40.89. 40.89. Oh, so that one actually had more. 40.89.19, 40.89.09. So this one had more volume and actually set another low. So this one's arguing the opposite of what the composite just argued. But given the big wide bar, you know, at this point I would think that you're still going to get some sort of continuation out of this. And the bad part about it is you left some volume at the bottom, although, you know, we're talking very close in terms of numbers. Not very different. Russell. And we look at the Russell. Now the Russell is the one that tells you everything. And earlier today, when I was in the teach and trade room, you know, the chat room here with the members, I was telling them the Russell is the one that was probably telling the true story today. And I'm going to draw this one out as we're here. And that is that, remember, we had these ranges. We had one up here, one there, and another one down here, right? And it was trying its best to trade down and under this lower range. And I need to draw these right. So once we get it right, then we'll see the ranges like they are. So you had three equidistant ranges. And so when I look at this, right, the Russell was down here at the bottom of the range on the breakdown. What does it do? It flips around, has a huge day back up, gets over the middle range and back into the higher one. Now the Russell can do one of two things, but the good thing here is that this push up puts it right back up to test to get back into the higher range and try to get to the top. Now the really good thing about the Russell, if it does continue, is you've got swing point highs up here, and you got two of them. And not only that, and that's good. In other words, if it breaks higher, it's going to have some momentum. But not only that, if you go over here, you also have it on the weekly time frame. So if it breaks on the dailies, it's going to break on the weekly as well. And you know how I feel about multiple swing points breaking on multiple time frames. That's a nice setup to shoot this thing up into the highs at the end of the year if it sets up that way. So the Russell is the one, to me, that tells the most today, because it's the one that did the most today, and that is it saying, hey, I really want to try to trade higher. And so that's the indexes. So that's the first thing I do. The next thing I do is I pop straight over to the sectors, and I just kind of flip through the 11 of them that I watch just to see what they did. So here you actually got a wide, not a wide, but a trade above yesterday's high. That's on the IBB. On the IYT, this struggled all day because FedEx got hit today on earnings. So this one actually traded down, back up. And let me see what that weekly looks like on it now, because it may have been the retest, and it was. So this goes into retest, has more volume though, but it does retest and pops back up. So that's a good thing. So it's going to hold that on a weekly basis. And then let me see what FedEx ended up doing. I know they were down about 5 or 6% at one point. So huge volume, and they get kind of a hammer here at the end. But that one's going to struggle. So FedEx is kind of done on its run for now, even though I think the analysts held their price targets on this thing. Let me see what the weekly looks like on it. And comes back. Yeah, it's going to have volume too, so it's going to come back and test some more. But you know, it's got good volume on this spike up here on this push. So FedEx may, in fact, you know, just essentially build out a base now. So the big run's done. So that was the transport. So the transports actually did okay, especially with that one doing what it did. The SOX gets under, back over, actually closes right at the highs and over them. So over yesterday's bar, that's good. That one's going to try to shoot up higher. XLB. And as I'm doing this, I'm kind of keeping, I usually keep notes, but I also, you know, can keep it in my mind here, how many are showing positives versus negatives. Here's the XLB. This one's kind of a negative in that it doesn't have the volume. It's going to test in this 4780, which is the top of this zone you see. So that one's kind of ambivalent. We won't know until tomorrow if it's going to break it or not. XLE is the one I was telling you had a huge day up, 4.5%. closed up 4.15%. So remember yesterday they spiked down, had volume. It was kind of a blowout. Well, today you got a blowout of the shorts because you went back the other way. Now you're going to come back into the retest regen zone. And let me see, you're going to come back 1, 2, 3, 4, 5. If it gets into it, it did today. So you're coming back within 5 bars. Okay, now the good thing about that is usually that will try to take you to the other side of the bar. Well, that's a big wide bar. The other side's way up here. So this thing could travel, you know, all the way up to here and still be bearish. And that top is 80.77. So this has potentially 10 more points it can run and still be bearish. That's the kind of moves, you know, given the kind of deadly trade this thing had done, that's the kind of move you can get on this and still not be, you know, doing anything to the other side. Now, I don't think it's going to go straight up there. Looks like about 78.68 is the first spot. And then it's probably going to mill around and then try to get up there. Maybe some sort of little ABCD structure to make its way back up there. So maybe this thing does something like this, right? And then makes its way up to that area. So bullish, but you know, it's got its big move today. You had to be in it today to get the move. XLF, let's see what this one did. Also positive. That wants to go higher. XLI. That one goes under, back over. And that was a little different setup. Let's see what the weekly looks like. And that one came in and did a full retest regen on the weekly. It's going to have more volume. So all of these are setting up more volume on the weeklies, but they're holding them. So that's actually a positive that will probably try to bounce a little bit more. So XLI is okay. So far the only one we have is XLB is going to, you know, struggle, and IYT is. XLK inside day doesn't really tell me anything. XLP also inside day doesn't say anything. XLU, that one actually wants to go higher, back to the highs. XLV, and this one gets under, back over, has more volume. So that one actually is almost set up like I think the NDX we saw like that. So that one is, you know, kind of ambivalent. It's not positive. It had a little bit more volume, so that's a little bit more negative than I'd like. And this one actually got up and over, so that's XLY. So most of these indexes, looks like about 6 of them want to trade higher. You got a couple of them that can trade a little bit higher, and then you got a couple that are going to struggle. So, you know, sectors look pretty positive. They seem to mirror what the Russell's telling me. So the next thing I do is I usually pop over and I look at the world markets real quick. And right now, the only ones I really care about are the ones where the central bankers are doing their thing. I might take a quick peek, though, to see what the Indian market did. And that one blew off volume at the bottom. So that one actually is going to try to turn. And let me look at a couple of the commodity ones. Here's Brazil getting a nice big bounce, which it should. The All Ordinaries, they traded last night, so they didn't get any bounce. If I look over at Hong Kong, let's see what Hong Kong did. Okay, so that traded down, tested the bottom, has more volume. 22.65. Yeah, so we traded down into it. 25. Yeah, that's it may get a bounce just because everybody else is going to bounce, but it's going to test more. So that one's not done yet. The China HCAP shares, I haven't been getting the volumes on these lately, unfortunately, but that one's going to try to work back higher again tonight. And then let's go look at the DAX. Pretty decent trade today, not bad. That one looks like it's going to try to go higher. The FTSE's kind of commodities, so it probably spiked, and it did. And the CACs. And the CACs also hasn't been giving me volume lately, and that one also pushed up. So unfortunately, I've looked around and I can't find volumes on any other places. So if these quit giving volume, that's going to be really sad, because it's a big advantage to have these world markets, and I'll have to figure out another way to get them. So those all look positive. They're going to try to push higher. And then I go over here to the Nikkei. That also is going to spike tonight. And that one looks like it'll spike up to about 17.1. So world markets look positive. On, you know, they don't look they're not like tearing things up, but they look like they can bounce some more. I went over and I looked at the FM, and the FM just crashed. So then I said, okay, what the heck is in this thing, right? Because whatever's in it is definitely bringing it down. And the biggest weightings in this is Kuwait. And you know that's oil, so that's a huge part of this, 25% of this index. And then the other 25%, or the next 25%, is in Nigeria and Argentina. Well, guess what? Nigeria is all oil as well, and Argentina is a mess. So if you go down, if you keep going down the list, you got Pakistan, Kenya, Oman, Morocco, Kazakhstan, Vietnam, and Romania. Those are the big ones. Inside that, it's financials is the biggest piece of it, and then you got telecommunications and energy. So financial is about 50%. So this may be, this is definitely a risk-on market, and the problem with looking at this right now is it's totally tied to oil. So the one I would look at on emerging markets a little bit more would be the EEM, although it's also tied to some extent. I'll have to look exactly what's in it again, but to some extent it's tied to oil too, but it got a decent bounce today. So emerging markets still struggling. They're commodity driven. That's going to be tough. The big news out here today, of course, was the Fed. Fed changed their language. These guys are creative. So they changed their language to get rid of considerable period, and they put in patience. I'm scratching my head if you're wondering. So what does that mean? Well, it means what it always means with the Fed. You tell me. Does the Fed want the market to go down? No. What is the... Anytime the market crashes, everybody's expectations crash as well. And what is economics other than expectations? Right? It's how people feel. Right? I mean, whether I buy something or don't has a lot to do with how I feel. How good I feel, how bad I feel, how sad I feel, whatever it is. Right? Some of the stuff I have to buy because I got to eat, or I got to drive my car, or I got to, some things I have to do. But everything else is discretionary, right? And I don't have to do it. And if I don't feel good about things, and if I see the world crashing down around me, I'm probably going to save my money. So what does the Fed have to do? They're not going to tell you that, but they have to prop the markets up. It's a continual prop of the markets. Why do they want 2% inflation? Well, part of it, of course, is to pay off debt, right? It's the way that countries can work off their debt by inflating it away and taking it out of your pocket. But part of it is also, if you look on the left-hand side of a chart, on a very long-term chart, and then look on the right-hand side, it looks like the markets always go up. Well, one of these days I'm going to have to draw a chart that has inflation taken out of it. And it's going to look a whole lot different. Yeah, it goes up, but not nearly what it looks like. So, when I look at the markets, and you can see it right here. I mean, here's the FXE. This is the European market, right? The euro. FXE gets clobbered today. What does that do? That jumps the GDAX, right? That pushes it higher. Why? Well, because it doesn't cost as much to buy whatever it was you were buying yesterday. Your currency just got devalued. And so you're going to get devaluation is going to necessarily drive markets higher. And that is what everybody keeps doing. That's what currency wars are all about. And that's what's happening again. So when the dollar goes down, everybody juices. All right? The money comes out of the other currencies into the dollar, and all these other markets go higher. And that's what you're seeing here on the FXE. It happened with the FXY as well, which is the yen. The money comes back out of the yen. That's kind of a safe haven when everybody gets worried. So what they're telling you is that this market wants to trade, or these markets want to trade lower. The dollar wants to trade higher. And that's going to put juice in those markets until, they overdo it. Here's the UUP spiking higher. So So that's what it is. Now, TLT we looked at last night. We said, okay, TLT is probably going to try to turn because it tested the highs last night, failed. What does it do today? Comes back, leaves volume. This thing's going to try to go lower again tomorrow. That also suggests the market's going to try to rally. If I look over at the junk bonds, we looked at these last night and said, okay, they did a 2-bar reversal yesterday. Well, if you believed it, good thing, because it was up 2% today, spiking, wants to go back up and do a bearish retest regen. Folks, you don't make this stuff up. I don't always get it right, and you know that. And I'm very honest about what I do and don't see. But when you see 2 or 3 things line up and you know that everybody's on one side of the boat and you know that you've got a catalyst coming up, that's a pretty good time to put some money to work. I told people that yesterday. I told my members again today. We moved some money into some more positions on portfolio. That's where you take your shot. It's not about calling the bottom or calling the top. It's not about predicting 6 months out. It's about looking at where the risk reward is and the probability of success. And then taking a little bit more risk when it makes sense and putting on less risk when it doesn't. That's what these calls are all about. I hope you use them that way versus, an all-in, all-out kind of thing. Gold. What did gold do? Gold sells down. Oh, this is interesting. So gold now, look at this. It tested the low, 113.74, got underneath it, no volume. This thing's going to try to pop back up. So gold now, even with a stronger dollar, this thing should have tanked. But if you look at it closely, you can see what's happening. This is going to be a good test tomorrow. You can see what's happening. That's the range off this top of this bar, off the bottom of that bar. That's the range that's holding here. And it's kind of interesting. My programs picked it right up underneath here. I suspect they did that. Let me look at this more closely. So this high is 114.72. Huh. I would have thought, no, because they're giving more weight to this bar. This is a wide price spread bar as well. And so they're using, the programs are using the bottom of this bar. Okay. So anyway, what's curious to me here is this looks like it's going to hold. And if that's true, then gold's going to try to shoot back up. That kind of suggests that the dollar's not going to rally nearly as crazy as it did yesterday. So I would expect some more pressure in the morning. If gold holds, you might look at a trade over there if you're interested. Let me look at the GDXJ. Okay, so that's spiked off the low. That one's going to do a retest regen off this bar on a bearish one. And let me just look at the large caps. Now they're stronger. Yeah, and they're going to do a full retest regen off these lows. So they can go up another buck or so. So if gold tests lower in the morning and these struggle, that would be a place where one could think about some risk, right, for a trade if you're doing day trade type stuff, right? Because you're looking at this bar, this top, that's where it's going to try to get back to, and then this low's top, right? Those two lows. So you can get anywhere up here. If this trades back down into this area and can't break back below here, right, you try to buy it down in here somewhere, put your stop up underneath here, and you're shooting for at least here or somewhere in this range. And that's a good reward risk. And the probabilities are pretty darn good, given the way gold looks and given the way this looks. So that's a nice looking trade. So you just saw me go through what I usually go through. That's what I do to prep. I just flip through all these, see what they're doing. And I just, mentally, I'm kind of cued in already on what's going on in the markets already. And so once I do that, then I go back and say, okay, well, what are the most important things I just saw? And what I saw was the Russell. I saw sectors supporting the Russell. I see continuation moves in junk bonds and the TLT, probably a little bit more into currencies. And, when I put those all together, that says this thing's going to try to move higher. That's your call. Folks, thanks for joining me. I hope you enjoyed that. Take care of yourself. I'll see you next time. Have a great one. Good night.